Hello and good morning, everyone. My name is Rufus Kamau, Markets Analyst at FX Pesa, and I'll be your host today on the Market Snapshot series. So we'll be talking about the key highlight events that we are expecting for the rest of the week. And once we cover that, we'll also be doing some technical analysis to try and understand where the markets might be headed next. So, as usual, I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade. So, you should always do your own due diligence and, of course, practice proper risk management. So, once you join in, kindly say hi on the live comment section. And if you have any questions, feel free to type them on the comment section. So let's get started right away with the economic calendar and try to understand what are the key highlights for the day as well as for the rest of the week. So today is one of those quiet days where we don't expect much of an activity in the markets. So the first highlight of the day is that there's a French bank holiday, so we don't expect much of an activity from French banks. So in this case, we are looking at France, basically celebrating the Armistice Day. So we'll also be having other bank holidays. One is Canada, where they are celebrating the Remembrance Day. Then for the US, we basically have the Veterans Day. So during this particular day, the stock market will be open, but the bond markets will be closed. So overall, we expect low volatility, especially from US dollar pairs. And out of that, we don't have any major news. So key highlights this morning, bank lending from Japan was up 2.7%. And this was same as expected and the same as the previous reading. So nothing much of a change. Then we had the current account, which is basically the difference between exports and imports in Japan, which came in at 1.27 trillion, a much bigger fall from the previous reading of 3.15 trillion, and of course lower than the expected 2.8 trillion. So this basically shows that in terms of international trade, Japan is losing big time with such a huge drop of more than 50%. So inflation expectations in New Zealand remain the same at 2.12%. Not much of a big change from the previous 2.03%. Then Economy Watchers sentiment for Japan came in at 47.5, which was slightly higher than the expected 47.2, and of course, compared to the previous reading of 47.8, it's not much of a change. So for the rest of the day, we don't expect any major news. So a majority of the big news in the markets will be coming later in the week. So fast forward to Tuesday at 10 a.m., we'll be getting the job market report for the UK, ranging from the claimant count change or the unemployment claims, which are expected to have increased to 30.5K in the previous month. Average earnings index or wage growth is expected to have accelerated to 3.9%, up from the previous reading of 3.8%. Then, as for the unemployment rate, we are expecting a slight uptick to 4.1%, up from the previous reading of 4.0%. Of course, we'll be getting a first major injection of volatility in the markets tomorrow at exactly 10 a.m. So we'll also be getting German final CPI, which is a measure of inflation in Germany. This will be a key market driver, especially for the persons who enjoy trading the German stock market or the DAX. Then we'll be getting the ZEW Economic Sentiment Survey for Germany and for the Eurozone at 1 p.m. And then we'll get a couple of speeches from Fed members in the afternoon, ranging from FOMC member Waller, then there's Bakin as well as Kashkari in the evening. So fast forward to Wednesday, we'll be getting two more speeches from FOMC members Haka as well as Bakin. Then we get the wage price index, or basically the wage growth, the wage rate in Australia at 3:30 a.m. on Wednesday. And then the top event of the week will be the US inflation data at 4:30 p.m. on Wednesday, where overall we're expecting inflation to have remained steady at 2.4% in the US. So then we get even more speeches from Fed members Logan, Muslim, and Schmid. And this will be quite a good number of speeches from Fed members. Of course, remember, even the Fed chair will also be speaking within the week. Then we look at the federal budget balance at 10 p.m. So all these impacting the US. So I believe that Wednesday, 4:30 p.m. Will be premium for USD traders, as we will be seeing increased volatility. And as we all know, higher volatility comes with higher opportunities as well as higher risks. Then we start seeing central bank governors speaking from Thursday. Here we'll be looking at Governor Bullock from Australia at 2 a.m. Then we get the job market report for Australia at 3:30 a.m. Then later on, FOMC member Kugler, ECB monetary policy meeting accounts. These are the minutes of the previous ECB meeting. MPC member Mann from the UK. Then we get the producer price indices. So the producer price index, which is a forward measure of inflation, will be coming up at 4:30 p.m. on Thursday, closely followed by the unemployment claims, which is a weekly data report for the US job market. Another FOMC member, Barkin, speaks at 5 p.m. We get the weekly crude oil inventories at 7 p.m. And then three major central bankers will be speaking on Thursday evening. So here we are looking at ECB President Lagarde, Fed Chair Jerome Powell, and Bank of England Governor Bailey, all speaking in one afternoon from 10 to 11 and then 12. So moving on to Friday, we'll be getting industrial production data from China as well as retail sales, fixed asset investment, then NBS press conference before we look at the unemployment rate at 5 a.m. on Friday. So a big set of data announcements from China on Friday morning. Then we get GDP data from the UK. This will be a key mover for the GBP pairs on Friday. And as we approach the end of the week, we look at the retail sales as well as core retail sales from the US, in addition to the Empire State Manufacturing Index or the New York State Manufacturing Index at 4:30 p.m. on Friday. So clearly quite a busy day with the exemption of quite a busy week with the exemption of Monday, where today we are not expecting much of an activity in the Forex markets. So outside of that, we have quite a number of companies that will be announcing their earnings this week. So I'll be jumping straight to that. But before we get to the earnings, I just want to highlight something here. And this is including the Fed decisions last week. So we know that after the US election, which led to the strengthening of the dollar and the stock market hitting new all-time highs for the top four indices in the US, there was the interest rate decision, which caused some good volatility. So I'll just be highlighting this. So in a widely anticipated move, the Federal Reserve cut interest rates by 25 basis points last Thursday. In a press conference following the announcement, Fed Chair Jerome Powell declined to comment on the central bank's plan for future rate cuts. And this was a key highlight in the markets last week. So, quote unquote, we don't think it's a good time to be doing a lot of forward guidance, Powell said. He later noted that Fed officials will need to gauge the economic data released between now and December before knowing if the central bank will cut interest rates again this year. So what this means is that since there was no forward guidance last week, we will be expecting to see some activity in the markets once we go through the different speeches from Fed members. So a lot of investors will be trying to understand how many Fed members are in favor of more rate cuts, maybe a December rate cut, and how many Fed members are in favor of just holding rates at the current level before the next president takes power on the 20th of January next year. So the first data the Fed will consider ahead of its next meeting will come out on Wednesday with the release of the October CPI. So Wall Street economists expect headline inflation rose just 2.6% in October, an increase from the 2.4% rise in September. Prices are set to rise by 0.2% on a month-over-month basis per economist projections, in line with the increase seen in September. So clearly, it will be a big decision week once we understand what the Fed members think and what they will likely be voting for on the next meeting. So on the earnings side, I think the key highlight of the week will be Disney. So let's just jump straight to that. So for Monday, that is today, we have Live Nation reporting earnings today, as well as Monday.com. So Tuesday, key highlights include Cover, Hertz, Home Depot, Instacart, Novavax, Occidental Petroleum, On Holding, Plug, Shopify, SoundHound, and Spotify. Just a second. All right. So the other key highlights on Wednesday, we'll be having Cisco reporting its earnings. Then on Thursday, we have Advanced Auto Parts. Applied Materials will be a key highlight for the week. Disney, JD.com, and Oklo. So on Friday, we'll be having a big Chinese brand reporting earnings, in this case, Alibaba, as well as Spectrum Brands. So we could be seeing more volatility coming in the stock market as a result of the announcement of these top economic events. So that being said, I think it's time now we jump straight and try to understand what are the key highlights on the charts, do some technical analysis before we end today's session. So let's jump straight into some technical analysis. So as we proceed, I'll be checking on the comment section. From Stephanie, she's saying Sione Kitu. I don't know what you mean by that. Maybe it's about opportunities in the markets today. Sio Savage, let's go. Thank you for joining. Hello, Paul Carey, Defined, Maureen, good morning. Vince Wanyuike, welcome. Joseph Gisharu, Manabasto, thank you guys for joining. Hello, Moses, Robert and Waridi, thank you guys for joining. Rono, Dennis in the house. All Sports TV, Noniza Jack, thank you for joining. Aldina, Pangari, Albunas, and Yusufu. We seem to be getting some new names today. Hello, Victor. Key highlight comment here. We had an event in Meru, Trading Masterclass. So this is good feedback. We enjoyed the Meru event. Looking forward to your visit again. So if you happen to hear of an event happening near you, make sure to attend. Of course, our next big event will be happening in Nakuru. So we'll be sharing the details shortly on our social media. So thanks, guys. Thank you for the feedback. If you enjoyed the event in Meru, we'll be having more events happening in the week. And good morning, Chris and Derek. So the key highlight for today, I know you guys are wondering where are the opportunities. I believe the key highlight for today is the German stock market, or the DAX. So the DAX so far has performed really well. I don't think there's any other market that is doing this. So right from open, the stock market index is up 1%, and it doesn't seem to be stopping there. There seems to be some good volatility, and it might be headed for a new high, similar to last week's high. So we could be seeing the market retesting last week's high, as well as the high that we saw in the previous month. So overall, for now, it seems more likely that the market will be pushing for this price action level around 19,563. So that being said, there are also other charts that seem quite interesting. One of them being the Euro card currency pair, which is on the verge of a breakout or retesting this major support area here. So if you look at this chart and try to understand what has been happening, then you'd notice that for over 10 weeks, the chart has been moving sideways, and now it's on the verge of a breakout towards the lower side. So we'll be watching patiently, trying to understand whether the market will eventually break or come right back upwards. So it's a key level decision point, and we'll be watching to see if there's an eventual break. But so far, it seems more likely that the market is eventually going for that breakout, and it could accelerate all the way down to 1.47748. But then we remain patient as we see how the market treats this price level, which has been acting as support for over the last 10 weeks. So Eurocard seems like an interesting asset to be observing to see if there is a clean break of this area. So outside of that, other European indices seem to be doing particularly well today. So right from the market open, the French 40 index is making some good rally. The Euro 50 cash index is also making a strong rally since the market opened. And of course, we have the Spanish stock market or the Spanish IBEX also making a strong rally. So they seem like likely candidates for the day. So outside of that, we have silver, which basically was trading above this lower trend line. Eventually, we had a breakout last week, a retest and a continuation, which implies that there is a likely change of direction in a silver direction, where we are seeing the market now consistently pushing towards the lower side. So from the forward chart, it's more likely that you'll be seeing the market looking to retest the last week's low. So in this case, worry about the interaction between price and this upper trend line on the 1 hour chart, with the potential of the market retesting here and then making that eventual drop. So we could be seeing something similar happening here, since we are seeing an overall change in trend, not just for silver, but also for gold, which has been extremely bullish for the better part of the year. But given the price action we are seeing on the daily, since the eventual bearish engulfing here is more pressure to move downwards. So for now, even though the overall long-term trend is bullish, it seems more likely that gold is looking to push a little bit further downwards, looking to retest some of the lows it created last week. So this is clearly a bulk pattern. Market goes down, breaks the lower trend line, goes right back, retests the trend line, and then continues in the same direction. So in this case, a potential extension of the bearish momentum to around 2649, 2650 price level might be in play for gold here. So remember, this is a trend line that has been holding for quite a period. So I believe we could be seeing the market retesting that price action level, especially considering that the dollar index is currently very strong. So outside of that, we also have the UK oil, which has been struggling to break the support area around 70.485. So on the forward chart, this is how it looks like. So last week was more of a mixed price action. So if I use the 1 hour chart, you could see the market was moving up and down, up and down, up and down, and closed the week on a low. So we could be seeing some support here in the market bouncing from these areas here and potentially continuing with the same pattern as last week. So we're already retesting the low that we saw last week. And of course, the highs were around this area here. So this was the activity last week. So now potentially moving to a pivot or an in-between move. So I would expect to see some at least bullish momentum, but not that aggressive, since today seems to be quite a slow day. So for US equity indices, it's a clear bullish momentum, a very strong bet on Trump. So we are not seeing much of an activity here. So yes, we had the first big move at midnight when the market opened. So market slowed down through the Sydney and Tokyo sessions. But now as we get into the London session, the Nasdaq is on the verge of a breakout, breaking into a new all-time high. So there are no candlesticks on the left. So if we break above this early morning high, then it could be a signal that the market continues moving higher for the rest of the period. And it's the same thing happening on the Dow Jones index. So clearly we had a big move, a slightly big move at the opening, and now the market is looking to retest the high that we saw on Friday. So if we break that high, then that could be the signal that we are moving higher. The Russell 2000 index also doing something similar. So it made a big move at midnight, and then after the big move has been moving sideways. So we observe to see if it happens to break the high that we saw here. So for the SP 500, also a similar move. So from the 15 minutes chart, you can see that we opened higher, and now the market is looking to form a new all-time high. And currently, it seems more likely that the market will be pushing above this area here and forming a new all-time high. So I'm quite bullish on the US equity indices. So for gold, I remember we analyzed this. Sorry, not gold, for Bitcoin. Here we had a breakout, a retest, and continuation pattern. So the market continued trading higher over the weekend. Remember, Bitcoin also trades on the weekends. So here, this was the closing price on Friday, kept going up. This was Sunday, and today we are seeing even more pressure to move higher. So this is a new all-time high of $81,800. So we could be seeing a continuation of this Trump trade, where the market is trying to price in a potential move by the US government to create a strategic Bitcoin reserve. So in this case, we are seeing more momentum towards the upside. So early morning trading was really good. We formed a new high. And now as we get into the London session, it seems like the market is slowing down. So we continue observing to see if we break above this area yet again. So on the currencies side, before we get to currencies, there is the Nikkei 225 index. It was trading in a triangle, managed to make the breakout here last week. Retested this particular trend line twice, and now is moving in the direction of the break. Of course, the very short-term targets could be on the highs that we saw last week. So in this case, the Nikkei could potentially extend this bullish momentum to the highs that we saw last week. So USD JPY managed to make a very nice bounce on this area here. And the overall trend direction for USD JPY is still bullish. So now we could be seeing an extension of this momentum all the way up to 154.716. So AUD had quite a mixed reaction last week. So after the election, a big drop. Then after the FOMC decision, up, and then further back downwards, which implies a likely market that has high volatility and a lot of indecision, which could show that this is not the right time to be looking for an opportunity in AUD/USD. So sometimes we have to be honest with ourselves. If you're trading a pair that is doing this on a daily, one day it's strongly up, following day strongly down, strongly up, strongly down, you gotta wait until you have a clear pattern. And we don't have that yet, so remain patient until the market presents a clear-cut opportunity. So pound yen still doing the same thing as USD, a strong bullish momentum today. So we could be seeing an extension of this. For pound USD, still suffering from a strong dollar. So clearly we could be seeing some further extension downwards. So from the forward chart, this is how it looks like. So of course, we were expecting to see some form of bounce along the lower trend line. And this is long term. A trend line that extends all the way from April is currently being retested. And it seems like the pound is really struggling to bounce from here. So it have already attempted twice, and now it seems to be going further back downwards, looking to retest the same trend line again. So potentially retesting this area here. And of course, we'll be looking for a potential bounce from this area. So for now, it seems more bearish, backed by the strong dollar index. You can see the big move of the Trump win, market pullback, and then Friday and Monday, we have erased some of these losses we had seen here, which implies that it's likely we'll see a very strong dollar this week. So given that expectation, a strong dollar against the yen, strong dollar against the Australian dollar, against the pound, means that we keep moving downwards. For the Euro USD, it seems to be the weakest link in town. So far, this was the lowest price after the Trump win. So the market bounce here has already been erased. So we observe the price action here to see if there will be a break. So from the 4-hour and the daily time frame, we are seeing that potential of the market moving lower. And if we break this area here, then the next target is a little bit lower, around 1.06116. So European equity indices have remained bullish today. So we're also seeing that happening here. So it's more of a market that went for some liquidity around this area here. And immediately after getting to this area here, there was a strong bounce. Now we are headed back up to around 81, 84. So I'm hoping I haven't missed anything. course, there's more major pairs here. We have the dollar trading against the Swiss franc. We have already broken above the previous high. So this was the big move after the announcement of Trump as the winner of the US presidential elections. So market pulled back downwards and then bounced and got back to the same area, and now we have a clean break. So this is what I want you to focus on, the clean break here, but not on USD against the Swiss franc. This has already happened. So now we are looking at a similar pattern, but now on Euro USD. So the market potentially breaking below this previous support area here. So we also have New Zealand USD. Here we are seeing an extension of the same. So potentially extending this bearish momentum further downwards. And for USD CAD, potentially the market retesting previous highs. So if you use the daily time frame, you will notice that we had identified this area as a strong resistance. Market pulled back for 2 days, and then after the Trump win, we got back to this high. So we had a drop on Thursday, Friday we recovered, and today the dollar remains strong. So we continue seeing a push higher. And of course, now the immediate target is all the way up to around 1.39439. So that's it for the day. I'll be checking to see if there's any questions that I may have missed before we end the session. So there's a good question from Vince. Curious to pick your mind on USDN direction following verbal intervention warning from the Bank of Japan on yen devaluation, US inflation data effects. So the thing is, the yen has been structurally weakening ever since the Bank of Japan proved that it cannot continue hiking interest rates. The last time they hiked interest rates, it almost crashed their entire stock market. So we were there, we were watching it happen. If you have not been following, this is what happened when they hiked interest rates by 25 basis points. The stock market crashed all the way down. So they promised that they are not going to hike interest rates again. And since then, their stock market has recovered. Then the yen has done the exact opposite. So despite the gains it had made earlier in the year, what we saw during the same period was that the yen, which had been losing throughout the year, made some good gains against the dollar. But then since they mentioned they are not hiking rates again, we saw the exact opposite in the market. So we have been trading USDN under the threat that the Bank of Japan may intervene anytime. So the idea is to continue trading the overall trend, which is bullish, but with tight stops. Just in case the Bank of Japan decides to intervene, you exit early in case you are wrong. But for the better part of the year, it has been more of a bullish momentum trade for both USD JPY as well as the pound yen, which has been more volatile than the USD yen. So pound yen is also doing the same thing. So if you look at the daily time frame, this was the beginning of the year, all the way to the top, a sharp drop, and then recovery has been following the same pattern. So checking on the comment section here. So what is the trajectory of the dollar now that the elections are over, and smoothly so? What to note is that the rate card did not do much to weaken it. Can we expect continued strong USD? Yes, absolutely. The 25 basis point rate cut was largely priced in from some time back. So the market is questioning the Fed. Why are they cutting by a paltry 25 basis points when they have the option of going for 50 basis points? So in this case, we continue seeing a strong dollar. There was quite a strong bet on a Trump presidency. Minimum capital, I don't think we literally have a minimum. You can even trade deposit $10 on your account. So of course, don't go for $10, $20, $30 in your account. There's a strong likelihood that you'll be losing that money. So it's better to start with a significant balance, $100 plus. But if you go for those $10, $20 account, there's a good chance that if you're wrong, you might not be able to recover. So that's it for the day. Thank you very much, everyone. So remember, if you're watching this on X, remember to like and share the video. If you're watching this on YouTube, like and subscribe to the channel. And at the same time, if you're just beginning your trading journey, check out the Novice to Pro series available on FX Pesa YouTube. And if you haven't started trading yet, make sure to register for a trading account. The links are in the description below. And if you're watching this on X, then the links are available on the FX Pesa handle. So just visit FX Pesa and register for that trading account. So thank you very much, everyone. Remember, we have a new episode of the Bullish Band podcast. Check it out on FX Pesa YouTube as well as other podcast platforms. And thank you for joining this session. Have a good trading week.